Yo, what's up? So this will be another series on my YouTube channel, which will be just about general trading, not macro. If you want to learn macro, you can check the other series. I highly suggest to do that. And before we start, I would just say that you can join the free Discord. It's in the first link in the description. It's free and there's a lot of value. So let's get started. So this will be episode 1, but could also be like episode 0. It's just like this is what actually to expect and like the truth about trading. So let's start with the opening. So 70%, some studies say 80. The European financial regulator found that between 74 and 89% of retail traders lose money. If you don't know what is a retail trader, it's just trader like you and me, which just trades from home at your desk, who doesn't trade at a bank or some institution or hedge fund or whatever, just like regular trader. So if you walk into a casino and 80% of players lose long term, you'd call it rigged. But millions of people open trading accounts every year and almost all of them blow up. Why? Not because markets are rigged, because nobody told them the truth before they started. That's what this series is. No Lamborghinis, no screenshots of massive wins, no promises of financial freedom in 30 days, just the actual truth about what trading is, how hard it is, what it takes to succeed, and a real roadmap for the small percentage willing to do the work. If you want easy money, just close the video. If you're actually here to learn, just continue watching. So let's start with what you've been sold. Because a lot of people just see this on Instagram and they think that they'll get rich of trading in 1 month, but that's not actually true. So before we talk about trading actually is, let's talk about what you've probably been told it is. Social media has built an entire industry on selling you a version of trading that doesn't exist. You've seen it, a trader at a laptop on a beach, a screenshot showing $50,000 in a single day, a Lamborghini with the caption, "My trading profits," a course promising $500 a day working 2 hours, a mentor with 200,000 followers who has never shown you a single verified track record. Here's what's actually going on. Most of these people make their money selling courses, not trading. The screenshots can be fabricated in seconds. The Lamborghini is listed. The 2 hours a day claim ignores the years of losses that came before it. This is not an accident. There are billions of dollars in the trading education industry built entirely on the gap between how hard this actually is and how easy they tell you it is. The harder the method looks, the more they can charge you for the shortcut. Real traders don't sell courses, they trade, because if your system genuinely made money, why would you sell it to your competition? So, there's like, I have this, but that doesn't really matter. So let's show the real numbers. Not Instagram data, regulated data. The ESMA brokers disclaim that what percentage of their retail clients lose money across major brokers, that number is 74 to 89%. The UK found similar figures. In Australia, 13,000 retail traders over 12 months, 70% lost money. Average loss $6,000. It gets more specific. A study in Brazil tracked everyday trader in the futures market over 7 years. Of those who persisted more than 300 days, only 3% were consistent profitable. 3%. Pro forma data is equally brutal. Most firms see 8 to 15% pass rates on their initial challenge, and of those who get funded, a significant number blow their accounts within 60 days. I'm not telling you this to discourage you. I'm telling you this because if you understand exactly why most people fail, you can be in the minority that doesn't. The next section is the most important in this video. So why most people fail? The real reasons: no edge. Most retail traders doesn't have statistically proven edge. They have a feeling, they've watched some YouTube videos on a few patterns and think they see setups, but they've never tested whether those patterns produce positive expectancy over hundreds of trades. Their trading intuition against algorithms running 20 years of backtested data. Okay, so what I mean by where was it? I don't know where is it, but pretty much if you have a strategy, you need to backtest it quantitatively and out of sample at least 3 years of data. So I'm don't just go and like backtest manually. Like you open TradingView, go back in time and backtest manually, because that is a false positive if that comes out profitable. Because that is just one way of the trades could have been taken, or how would I say it? It's kinda hard to explain. But you just gotta backtest it quantitatively and out of sample, preferably, or like out of sample at least 3 years. Out of sample is like a set of data, set of like time when the strategy was not performing well. And if that data comes back profitable, that is like a really good strategy, and that is really hard to find, to be honest. Risk management doesn't exist. Most beginners risk too much per trade. They're convinced about the setup and going big. One bad trade wipes weeks of gains, or they don't use stop losses because the market will come back. It doesn't. Your account is your most important asset. You cannot trade tomorrow if you blow it today. Number 3, psychology overrides the system. You can have a strategy that generally works over time and still lose money by not following it. You move your stop loss when a trade goes against you. You close profitable trades early out of fear. You take a revenge trade after a loss to make it back. You double your size because you're confident. Every one of these decisions destroys your edge. Treating like gambling. Professional traders treat this like a business with data process and ruthless self-evaluation. Most retail traders just put money in and hope. They don't journal, they don't check stats, they don't review mistakes, they just trade and hope. So if I had to like say what's the most important out of these, I would probably say it's between these two, to be honest. Because, and this is probably like the least important. This is like, let me like 1, 2, no, let me put like 1 or 2 and also 1 or 2. This is 4 and this is 3, maybe? I'm not sure. But with edge, if you have edge, your equity curve should look something like this, right? This is a healthy equity curve. You know, no equity curve just goes like this, just up. That is not possible. If somebody tells you they have equity curve like that, they're just lying. So you are making money, right? But if you have bad risk management, you can, for example, under risk here and over risk on these moves. So maybe an edge, an equity curve with edge, but bad risk management could have also looked like, you know, not good. So it wouldn't be profitable. And also I saw some guys on the YouTube saying that if you actually just take random trades like short, long, just flip a coin, you know, with risk management, like only risking 1% per trade, you will eventually end up break even. So maybe it is the equity curve, risk management that is more important. So what actually works? So if those are the reasons people fail, what actually works? First, build a real edge. An edge is a repeatable set of conditions where over a large sample of trades, you'll make more money than you lose, which is just like when you do the equity curve, right? Not 10 trades, this is important. Not 10 trades, but 500 to 1000 trades. I wouldn't call it trades, I would rather say it in years. For example, something impressive is 10 years. That is really impressive. If someone has like a positive equity, just like profitable over 10 years. With data, the edge can be anything: a technical pattern, a macro thesis, a time of day effect. What matters is you've tested properly and you follow it consistently. So what we will be focusing on is the macro thesis. I'm not saying we don't use technicals. You can use technicals, but it is so hard to find a profitable strategy, just pure technicals. It's almost impossible. And yeah, it's really hard. I'm not saying it's impossible. It's you can do it, but it's very hard. And I feel like macro thesis is like better option. Second, risk management is the game. Professional traders obsess over risk management over more than trade selection. You can have 40% win rate and still be profitable with the right risk to reward ratio. If you risk $100 to make $300, you only need to be 34% of the time right to be break even. The math protects you even when you're wrong. Most beginners do the opposite, the risk, blah, blah, blah. Just, I mean, this is, I would have explained it. If you have 1 to 3, you probably have smaller win rate. But if you have 1 to, what's this? I don't even know. Yeah, 3 to 1, you probably will have higher win rate, but that doesn't mean you will be profitable. Like, it's just, let me show you a trading risk to reward chart. Yeah, this. So if your average is 1 to 3, you need to have 30% win rate to be profitable. If you have 1 to 4, just remember this, or like take a photo, or like look it up. There's many of them. It's just the same thing. So with for example, so let's say you have 40% win rate, right? You think that's good, but you only take 1 to 1s, so that's still a loss. You actually need to take at least 1 to 2s. I think like that's really small profit. Like that's really small. You would preferably will want to be one above the profit. So not here, but here. And also this is like very good, but this is also here. So one next to the profit, or like one below. So I usually take 1 to 2s. So I aim for, to be honest, I aim for 50 to 60% win rate. And the rule: risk no more than 1% of your account per trade. On a $10,000 account, that's $100. It feels small. It's supposed to feel small because 10 consecutive losses, which will happen, only cost you 10%, not your account. So this is designed on a real life account or a funded account. You can risk more on prop firm challenges because you want to pass them quickly. You don't want to wait till you make. With this, you would have to make like 18%, which is a lot of time. So don't be scared to over risk on prop firms challenges like phase 1, phase 2, phase 3, whatever. Their process, your profit. Every beginner focuses on profit, every professional focuses on process. If your process is correct, good risk management, following your system, journaling trades, the profit follows. Focus on the process, profit is the outcome, not the goal. So let's have a look at like a realistic timeline. First 6 months, that's how long it takes most people to begin understanding how markets actually move, not to be profitable, to understand, stop being surprised by things experienced traders consider normal. 1 to 2 years, that's how long it typically takes to develop a genuine edge, to have tested your approach properly, to understand your own psychology in live market conditions. 2 to 3 years, the realistic time frame before consistent profitability, and consistent doesn't mean winning every month. It means being net positive over a 12-month period with acceptable journals. Now this is questionable, some would say more, but I feel like 12 months is good time. So most people quit in months 2 or 3, they've had a losing streak, they've blown part of their account, they've realized it's harder than they thought, and they walk away at exactly the moment before the compound learning starts to kick in. The traders who make it treat the first 1 to 2 years as tuition, not losses. Every loss is data, every mistake is a lesson. The traders who approach it that way, who journal, who study, who stay humble, are the ones who eventually make it. And here's the honest truth. The ones who make it are not the smartest people, they are the most disciplined. Intelligence help? Discipline is what actually separates the 3%. So, now this is, I would say, really realistic. And if you have like a good mentor, which shout out to myself, we can take this down like couple of months. I don't know how much we can take it down, but I will help you any way I can. And it's for free. It's in the Discord. It's free right now. So yeah, if you actually learn from someone who has already been through this, I feel like it will be faster for you. So I highly suggest you to do that. So just join the Discord bio. It's free right now, so don't waste your time. And this is the first video. We broke down the realistic truth about trading, no BS. So hopefully this didn't break your heart. And I know that many people, when I said probably here, like you need to quantitatively test your strategy out of sample, blah, blah, blah. Or maybe when I read like this, like no BS, what you've been sold, they probably clicked off the video. But if you didn't, if you actually watched the whole video, just stay tuned for the new series. Also watch the macro series. Join the Discord, and yeah, I'll see you all the next time. Bye.